Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, June the 16th, year's 2020. Let's talk trading. Milk your cow. Now, traders, before we get started, let's just get the disclaimer out of the way. These videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And I've got Walmall on the line. Walmall, how's your neighbor's cows doing today?
They're not doing so good. Well, my cow's doing really good. So, I had said to TRO this morning or earlier today, I gotta learn something. I gotta remember I gotta milk my cow and not my neighbor's cow. And where that was coming from was from I guess two places. But if you had read some of the documents that TRO wrote many years ago, this whole idea of going and once you find something that's successful, just go back to it every day. Just go back to it. Do it again and again and again. I think tell the story, TRO, how you got that name, Milk Your Cow.
Oh, milk the cow?
Yeah.
Well, I live out in the country, and every day, the dairy farmers go out and they milk their cows. And so when I was trading stocks, have to get up early in the morning. I have to get up at 6:30, 5:30 my time to be at the market open, because to me that was the best time to milk the cows. And so I would call the stocks that I traded, those were my cows. I mean, there was like 8 or 9,000 stocks out there. Well, you can't trade 8 or 9,000 stocks. And, some people are out there doing the stock of the day, the stock du jour, trying to find the hot stock. And I realized that it's like, wait a minute, that approach, is just too random. You really don't have consistent results. But if you find a stock and you learn the price movement, that's when I started using frequency distributions and came up with the buy zone. I got my herd of cows, 1, 2, 3, 4 cows, and I would just go milk those cows every day until they dried up. I mean, I remember, I think I traded Taser. That was the only stock I traded for an entire year. Just in and out, day after day. And then I switched to Google, and then I think I switched to Apple. Then I think but it was like, I ran those statistics over on StockFetcher, and it was like, that's why I wrote that little milk the cow checker, because it would show me what stocks work best with the method. You see, the problem that I found most traders come up with is they learn one method and they try to apply it to everything. So it's that old give a baby a hammer and everything becomes a nail. So, certain currencies have bigger daily ranges than others. So on those type of currencies, you might want to use a breakout strategy. Other currencies, they just range. So on those types, you might want to use a reversal strategy. So you have to find the projects for the tools that you have. You try and put one of them squiggly lines on everything, and it just doesn't work.
Yeah, and that's kind of like what I did with the Walmart method. Was sort of, I saw that it works very well with the pound dollar because of the way the pound dollar moves. It works very well also with the euro dollar. But that same method of trading, if you try that on the chief, on the Swiss franc, you just will not be successful. Well, I'm not saying that you won't be successful, but it'll be a lot more difficult to be successful just because it's just the way that particular pair tends to move. And so you got to go and milk your cows with the tools that you have. Now, the reason why this topic came up today was because what I did today was I've been going and studying another trader and how he does things, and it looked like it looked like it was very enticing for me. And, and this is not the first time I've tried to do this, but I got hammered on it. Now the thing was, I had already made my core. I had milked my cows. I had money in the bank. And so I was in a much smaller position size. So it didn't hurt my bank account that much. But, here I am trying to go and milk somebody else's cows. And I have to go and question myself, why would I milk somebody else's cows when I've got my own cows that are providing lots of milk for me? Am I setting myself up for failure? And I got to be very careful about that. Let my neighbor go and milk his cows, and I'm going to go milk my cows. And, if he's happy, I'm happy. We're all happy.
Yeah. In fact, when you said that, I pulled up the brain management screen because, was it FOMO? Fear of missing out? Hey, this other guy's making money doing this. Maybe I should do it.
That's probably exactly right. And I think that was, because of his method, the way he does things, when he gets a good run, he can easily see, 3, 4, 5 multiples, on a run. So what I mean by that is that, let's say he got a stop loss set at 20 pips, he can easily see 40, 60, 80 pips on that run. That's not how I trade. There's nothing wrong with that if that's your method and you've proven that you can make money doing that. But the reality was that I did that and I got into the trade, and here I am, I'm down 18 and a half pips on the trade, and I'm looking at it for, I got to get out. Didn't pay attention to where I put my stop loss, where truly I should have had the stop losses at 20 pips. It turns out that I had it at 18 and a half because of, again, not being my trade, and I got nailed for an 18 and a half pip loss. And the funny thing about the whole situation was, had I had the stop loss in the right spot, that trade actually would have been profitable. So it's sort of like, so there's nothing wrong with his method. There's something wrong with me trying to trade his method, and it's just not what I do, not what I do well. Now, the thing, so I took an 18 and a half, loss on the thing. Well, guess what I did? I went back and I went and milked my cows. I went back and milked my cows over and over and over again, and so now that entire loss is gone. In fact, I'm up by a little bit more than 3.5 pips. It would have been nice to have not gotten into that mess in the first place, because what that really would have meant was, if I just would have traded the way I traded, not traded his method, only traded my method, I would have had plus 24 pips instead of just being up 3 pips and having to go through all that aggravation, all of that pain, all that regret, all that brain management stuff that defeats us, And I think we set ourselves up for failure a lot of times because we don't go and do what we do well. And trading, 90% of it's psychological. You need to figure out what's good for you, what you can do well, and do it. It's sort of like, if you're a type of person that can't draw a lick, why would you become a graphic artist? If that's the wrong tool. You should be going and doing something else. And now you may be a great programmer. Well, maybe that's what you should do. You should code. And each and every one of us have our own unique ability to go and do certain things very well. And unfortunately, the other side of that coin is, there's a lot of things that we don't do well. Okay, let's find those things, and let's go and base our trading based on what we can do well.
Yeah, and so, as I mentioned in yesterday's video, we talk about, moving away, moving towards, or moving across. And, almost every method, it's when price gets to a level, you enter the trade, whether it's a squiggly line, a horizontal line, a trend line, or a pivot point. That's what you do. So I'm bringing up the chart here, the 1 hour chart that shows the previous hours high and low along with the current hours. And because I said, for the rest of the month, let's just take H1 breakout trades. If you're new to the channel, welcome. And because these are simple trades, you trade with candle color at the line. So you got a bear candle here, it hit that low, it dropped down. So you had a potential of making about 20 pips off of this one single trade here, this hour. Very simple. And I've got the new smart ranges all gauge here. And so you can look at the H1 right here. You can see it ran 47 pips this hour. Okay, for the day, high-low range is 100. And right now, from the open of this H1, it's 29 pips to the south. And if you notice here, previous low minus the low, once again, 21 pips. It was in the 86th percentile. And what that 86th percentile means is that when you subtract the low from the previous low, 86% of them were less than this. So it's like, wow, I'm at a level where maybe I should get out once you get past that 80 level on this particular indicator, because you can see here now it's only 4 pips below. So you didn't want to give up 17, 18 pips. You got to take some. Now, Walmart and I, we might have taken 3 or 5, and then, it's one of those things we got to just walk away and not look back. In fact, I was talking to Walmart earlier. I said, hey, I got to do some trading. We got to stay, focus in the moment. And he started talking about, well, then I go, no, you got to get back in the moment. I got some serious trading I want to do here, and that's something that a lot of people will do, and it's not the hairy hindsight. It's just, instead of focusing right here, right now, and getting that trade, they'll talk about, like a bunch of old guys do, talk about the glory days or something. Well, you see all these trades back here. You don't see nothing here. You can't trade this candle. This candle's done. This is the only candle you can trade.
I think that contributes a lot of to our all of our ROGO and our ROMO and our FOMO and all those things, because it builds on itself, because it's sort of like, if I only would have gone and picked up those 30 pips or those 20 pips, if I only would have done this, if I only would, it doesn't matter. It's done. Okay? We're sitting here, for instance, if you're looking at the 5-minute chart on the GU right now, what is price doing? It's coming off of, this hour's low. Is there an opportunity to trade there? Maybe, maybe not. I don't know. It depends on what your system is. But that's what we have to go and base our decision on. Not what happened an hour or two ago and what we missed out on, but based on what is price doing right now.
Yeah. And so it's just like with the rat zone. I just brought the rat zone up, and you can see price isn't in the rat zone. It left the rat zone right here at 26.67. And Walmart can tell you, I was in a short and I got out of one, and then and I kept saying, I shouldn't have done that. He said, no, that trade's over, TRO. Forget about it. Because see,
move on, find the next one.
That's right, move on. You took the trade off, it's over with. It's like, man, if I had only left that trade on, I would have had a couple $100 more bucks. It's just like, dang it. But you gotta get out of that. I mean, the only thing you can do from the past is learn from it and say, okay, I did that for a reason. What's the reason? Was the reason valid, or did I just mess up? Because, but I chose to do it for a reason. And it was, and the part of it, was it the chart or was it the pain? Because, that pain management, we all do it. Because what's think about it. We get in a trade, we're up 2 or 3 pips, and we don't take it. What happens next, Walmart?
Well, that's where I got into trouble earlier. I was up 2 pips, and next thing you know, it ran against me, so I was in that negative 18 pip trade. My message says, get out with the 2 pips. If you see it not doing what it's supposed to be doing, get out and take your 2 pips. This other trader's method is you stay in it and you let it run even 20 pips against you, because in his methodology, he believes that it's going to go back up the other direction, and he's willing to let it breathe.
Yeah, like I was going to say, in fact, I read something today where the guy says, once you clear your spread and you're positive, never let it go negative. Even if you only take a point, you don't let it go negative. And you know what, Walmart, the fastest 15 minutes of trading is up again. It's like we have too much fun doing this. So, fellow traders, I hope that helps. And like I said, we're just taking these H1 breakouts. It's a real simple trade, and just do it for the rest of the month, especially if you're new, you're trying to figure out how to trade. And you might be so successful you don't ever trade another method again, because you have to remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And once again, if you're new, please subscribe, click like, click the bell, and share the video. The Rumpled